Okay, today is a big day. We're going to actually go through and I'm going to show you the roadmap of where we are right now and how we are going to get to lower interest rates for home loans. I'm going to draw this out for you and show you the boxes that we need to fill in and the numbers that we need to fill in order to get to where inflation is back to where it needs to be, allowing home loan interest rates to come down back into the fours, which I anticipate to occur with my company by July the 1st. And it may go further than that, it may go faster than that, but we're going to take a look at that here. And I'm going to show you exactly what needs to occur for that to happen. If you like this information, if this is at all useful to you, please make sure that you click the like button and subscribe to this channel because we give this information out each day. And if you don't understand some of the topics that I'm talking about through this video today, it's important that you watch these videos more often in order to learn more about what makes home loan interest rates move, because there is a lot to it, and it definitely is not probably what you've heard in the past. So let's jump in. Today is January the 26th, 2023. It is now 3:18 p.m. Central Time, and it is important to know that today is January the 26th because tomorrow is January the 27th. What do you know? So that means that if you take a look at the economic calendar of what comes out and what reports are released at certain times, you will know. And if you are watching this channel for the past month, I've been talking about January the 27th being an important day. Now, it is because we are going to get the release of the Personal Consumption Expenditures Index. There are three big reports that we look at when we're trying to handicap what is going to happen with home loan interest rates. The first is we're paying attention to what the Federal Reserve is doing with the adjustments to the federal funds rate. The second item that we're looking at, and this is in levels of importance, is the Personal Consumption Expenditures Report, which we're going to be looking at here today. The third is the Consumer Price Index, which we're going to be getting another report here in February. Those three items are what allow us to have a very good understanding of what we believe is going to be happening with the future of home loan interest rates. Now, we all know that interest rates have more than doubled in most cases in the past year, and now they've come drifting back down after what I think was really the peak for home loan interest rates in the November-December timeframe, because inflation began to peak in the September timeframe, which we're going to take a look at that chart here in just a minute to show you what I'm talking about. Now, if some of this information is repetitive, that's good news, because that means that you're learning what I have been putting out there, and all of a sudden you're going, yeah, CPI and PCE and home Fed funds rate. We already know that, Brent. What's going on? So let's take a look and see exactly what is going on here. Okay, so the Personal Consumption Expenditures Report is being released January 27th. Now, that release is going to be for the reading of December of 2022. So what was the monthly reading for 2022 December? So let's take a look and see at some of these other numbers here. Let's look at the current release. So this is the release that came out in the month of December. I think it was December the 23rd. And it is showing the November reading of 2022. If you take a look further down here, what we are paying attention to is the Personal Consumption Expenditures excluding food and energy. When you exclude food and energy, that is what's called the core reading. And that is what the Federal Reserve and the other economists are looking closely at when they're making their policy adjustments. So we follow the PCE excluding food and energy. Now, these numbers that you're looking at here, if I roll this back up, July, August, September, October, November of 2022, those are the month-over-month readings. So that basically tells you that the inflation for this characteristic here, or this basket of goods, and again, if this doesn't make sense, go back and watch some of the other videos. This was 0.1. So inflation was at 0.1 for the month of July. August was 0.6. September was 0.5. October was 0.3. November was 0.2. Now, again, that is the increase month over month. So don't think that inflation was at 0.6. Inflation for the year was down here. The year over year reading was 4.7, 4.9, 5.2, 5.0, 4.7. This is why I'm saying that I believe inflation peaked in September of 2022. So we had this run up 7, 9, 5.2 was the peak, and you see it rolling over to now 5.0, 4.7, and I believe it's going to continue to go down month over month into the future for a while. So what does that mean? Let's take a look and see what that means for us on our handy dandy chart that we have put together here. And this is something that you want to pay close attention to. Now, we are going to take a look and see where home loan interest rates are today, but it's more important for us to take some time and look further into where we think home loan interest rates are going, because tomorrow's report, the personal consumption expenditures report, is key. So if you're paying attention to this, again, make sure that you follow it on a day-to-day basis. This chart is something that I have put together that illustrates the months of the past and what we're going to be replacing those months with. So when we look at the number that the Federal Reserve really pays attention to, it is the year over year reading. So it's not just these months, but it's the year over year reading. How do we come up with a year over year reading? We combine the aggregate of the last 12 months of month over month inflation. Okay, so these are the month over month inflation readings, 0.5, 0.4, 0.4, 0.3. We add all of these together for 12 months. That gives us our annual reading. Okay, so our current annual reading is 4.7. Okay, so all of these, including the last reading that we received. The last reading that we received was for November of 2022. That came in at 0.2. It was rounded to 0.2. It was actually, it's a hundredths digit, so it might have been like 0.17, so rounded to 0.2. But we're sitting here at 4.7 year over year core personal consumption expenditures. Now we're going to get the December reading. The December reading is going to kick out December of 2021, and it's going to replace it with December of 2022. So this chart, guys, that I've put together here, what we're going to do over the coming months is we're going to replace or fill in the lavender numbers. And that is how we are going to follow the path to inflation being where we want it to be. So tomorrow, I'm expecting that the reading for core PCE will be at about 0.2. So that's something that I've said in my previous videos, that I believe inflation is going to stay at about a 0.2 reading, sometimes 0.3, sometimes 0.1, but average out to about 0.2, which is good because that would allow inflation to slowly subside into the point that we are where the Federal Reserve wants it to be. So bouncing back to my little chart here, this is always going to be at the top. The Federal Reserve's target for core personal consumption expenditure is 2.0%. That would be ideal. Okay, so that's what we're going for. Right now we're at 4.7. Well, you don't have to be, a math whiz to know that's like almost 150% higher than they want it to be. Okay, so we need that to come down. 4.7. So if tomorrow we get a 0.2, right, that is going to then drop year over year personal consumption expenditure from 4.7 to 4.4. That is a great reduction and what we want to see. Then I'd be able to fill this in, 0.2. And let's say that for January, we get a 0.2 as well. Okay, now again, that January reading will come out in February because it's always a month behind. So let's say that that's 0.2 as well. Now inflation year over year is at 4.1. So 0.2, 0.2. Now let's say the February reading is 0.2 again. We're in the threes at 3.9. And I believe that we are going to be able to follow this trajectory all the way into probably maybe even August, September, October before we're really going to start to see it truly level off. And why is that? Because look at the existing numbers. These are numbers, everything that is now in the white those are numbers that have been released. Those are the numbers. So if you're looking at January being a 0.5 that we're going to eventually replace, and 0.4 for February, 0.4 for March, these are all 2022 numbers. These are rather higher readings, which will be easier to bring in a number that is lower than this number, which then brings year over year inflation down. 0.5, 4, 4, 3, 4, 6, 1, 6, 5. Okay. So we have all the way into September, we have higher than average, higher than normal readings, which should allow us to be, I talked about having a fight with the personal consumption expenditures and with the 200-day moving average on the chart we're going to look at it in just a minute. Well, it's easy to win a fight when your inflation number is 0.6 month over month. It's easy to show inflation lower than that because that's tremendously high. And now that we're seeing inflation coming down, we should be able to win those monthly battles by replacing those inflation numbers with month over month readings that are much lower than those that were released in 2022. Okay, so that's why we should be able to make that happen. We're already at 10 minutes here, so I'm going to need to move over to our daily numbers here. But you can see how we are going to fill these lavender boxes in. Now, unfortunately, we don't know these yet, so I got to back these back out. And this is the number that we're focused on. Tomorrow, we will be able to fill in this box. It is currently at 0.5. We are currently at 4.7 year over year. We need to see something lower than a 0.5. Guys, the personal consumption expenditures reading is going to come out tomorrow at 8:30 Eastern time. So make sure that you set your clocks and watch that because it's going to start to become exciting and fun when you're able to go, cool, that's what we wanted. He talked about that. Brent said this. Brent said that. Now remember, it's not the headline number that we're trying to get. It's the core reading. So you're going to have to listen for when they say the core month over month reading. That's the number that we want. The headline number is something a little bit different. So pay attention to that. Where are we on our home loan interest rates as of this moment? Let's jump over to our charts. We're down 11 basis points on the mortgage-backed security. We're up 4 basis points on the 10-year treasury. Probably why? Let's all say it together, because we are in front of a major report and banks are hedging their bets. Investors are hedging their bets. They pull back a little bit to wait for that personal consumption expenditures report to come out. And then we should see, if it's a good report, a flood of money coming back into the market. But right now, they're going to hold on until they get that number because they don't want any surprises that they aren't expecting. So I'm not surprised to see us down 11 and up 4. That's all right. We are still between our ceiling of resistance and floor of support. You can see how, clearly we're bouncing between these numbers. Tomorrow, we are hoping that we will break through this Fibonacci level and we will have that fight. I talked about yesterday, we're going to have a fight. The fight that we're going to have and what I want to win is the battle with the 200-day moving average. We need to break through this ceiling of resistance, the 200-day moving average, in order to begin to see, again, the clouds begin to clear and home loan interest rates consistently continue to come down. Where are we on home loan interest rates as of this moment? We're going to take a look at the Brent Bruce Daily Conventional 30-year fixed mortgage. Guys, this is a very well-qualified 30-year fixed conventional home loan. These are the real rates as of this moment today, 3:30 p.m. Central Time, with an actual mortgage broker. Okay, so I am showing you behind the scenes. So right now we're showing 6.125% with a credit of $792. If you're new to the channel or watching this for the first time, guys, this is the actual interest rate. There's not anything else. There's not extra points. This is not with 2 points of buy down or anything crazy like that. This is the scenario that I'm looking at. This is a very well-qualified 30-year fixed, 800 FICO score, 25% down. So yes, this is a very well-qualified client, but this is the actual interest rate. If we open this up, how much does it cost to get into the fives? You can get it 5.99% for $364 on the scenario that I just showed you. If someone is willing to pay a point, or you have your seller willing to buy a point, you're looking at between 5.75 and 5.625 on this 30-year fixed conventional home loan. Guys, tomorrow, if we get the personal consumption expenditures report that I'm hoping for, we should be somewhere about 5.875% to 5.75% on the Brent Bruce Daily Conventional 30-year fix with no points, and probably closer to 5.25 with a point. That is what I think we're going to have by either the end of tomorrow, maybe the Monday time frame, if the report comes out the way that I am hoping that it will. And if nothing else happens, like maybe the federal government releases another $1 trillion in stimulus or something strange like that changes our expectations. That's what's going on. This is a longer video, but you just saw the roadmap, the actual roadmap for how we are going to get to those lower interest rates that we're all hoping for. Now, with what I have put out, you have the ability to talk to your friends, family, customers, buyers, other real estate agents, or anyone like that, and understand why people are predicting what we're predicting and why I think interest rates are going to come down. Make sure that you like, subscribe, share, and tell other people about this channel if you think that it's interesting or it's helpful. It does help me tremendously. Also, don't forget you can comment. I think I've responded to every comment that I've ever gotten. So I will personally respond to your comments. Let me know if you think I'm crazy or if you have a different perspective. I will talk to you again tomorrow, 8:30 a.m. Personal Consumption Expenditures Report. I'll probably shoot a quick video out right away when that comes in as we see the markets moving. Talk to you then.